Today, I just wanted to get on here and talk a little bit about non QM mortgage loans and what some of those options are. So, non QM, it just means non qualified mortgage, and that means you're looking outside of your traditional, conventional FHA, VA, USDA type conforming loans. There are a lot of different types, and a lot of different companies, a lot of different investors that can provide those. So for us, those are brokered out products, but those are things that we offer and provide. Um, those types of loans are going to be things like bank statement loans, P&L, so profit and loss statement loans, things that could appeal to someone who is self-employed that according to their taxes it may not show that they make a lot because they have had a lot of write-offs the last couple of years. That's a way for us to look at positive cash flow and see those bank statement deposits every month, see if we can still get them qualified on that. um, that could be people that have a high net worth. They have a lot of assets. They have a lot of things out there, um, that they'd rather get qualified that way. Um, those types of things generally are going to, not always, I will say generally, are going to have a higher interest rate. They're going to have different guidelines, different qualifications and requirements. But those are ones that we do a lot of. Those are also going to tie in with your jumbo loan products. So those loans purchases are going to be over the regular conforming loan limits. If you need to know what those conforming loan limits are, I'd be happy to go over that. It depends on what area you're in and what time of year or what year you're in at that time that you're looking at it, because those do change every year. We just had an increase in that. So we can go over more details on that later. Another one that I did want to note, that I did want to talk about are DSCR loans, and those are debt service coverage ratio loans. Those are for investors, whether you're purchasing or refinancing. Those are a good way to utilize the rental income of a property instead of whatever your business income is. You can look at, whether that's a multi-unit property. If you have, say, 3 out of the 4 units rented, we can take that rental income amount and figure out what your debt service coverage ratio is and whether that would qualify you to purchase that home or refinance it versus traditional qualifications. Those are just a few. We do have some other options. We do have multiple investors for a lot of those different options, and each of them are going to vary a little bit on what their requirements are, but definitely worth taking a look if you don't fit into those normal conforming brackets. Let me know if you have any questions or comment below. Thank you.